The market crashes down through our first support zone, then rallies back above it. Was this a warning shot from the bears, or are the bulls still in full control? Find out next on Invest with Jacob. Okay guys, so sometimes when the market is laying out a pattern in real time and you're answering questions and trying to keep up with everything, you miss the pattern that it is laying out. And then if you step away and come back and look at it again with fresh eyes, it's so clear you wonder how you could have missed it. Well, that happened to me today when I saw the market bottom in a pretty odd spot between our two support zones. But when I came back and looked at it again, it made perfect sense. Now, I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so where the market bottomed today seemed like a pretty odd spot at first, but when I came back and looked at it, it was absolutely perfect. So the best way to see this is on the charts, so let's jump in and take a look. Okay guys, so here we are on the 5-minute SPX chart, and you remember a couple days ago I put these support boxes on here and said that if we broke through support 1, it could be a warning that we're starting wave 4 down. And today we broke through support 1, but we didn't move into the main support zone, which I would have expected, so this was a little confusing at the time. But when I looked at it again tonight, I realized what happened and why it stopped right here. So in this corrective movement down, we have an A, B, C that's pretty clear. And the A wave starts at 44.80 at the top and comes down to 44.42, which is a 38-point move. Now we know in corrections that the A wave should be roughly the same length as the C wave, so we would expect the C wave to be around 38 points long. When we get our B wave bounce here up to 44.58, 38 points off of that takes us right down to 44.20, which is below our support box. We actually bottomed at 44.17, which is still roughly within the range that we're looking for. And this is a valid support zone. So even though it broke this support box, it held the correct support that it was supposed to. And that's why we didn't move down into our main support. So the question we have is, what corrective setup is this? Is it a smaller wave 4 with a wave 5 up towards 4,500? Or is it a setup for larger wave 4? Now, if this is the setup for the larger wave 4 down, I have some issues with it, and here's what they are. So even if this is A, B, C, A of A, all right, and then A, B, C, B of A, and then 5 waves down in C, and then you get A down here around 4,400, that's still too small. It's only an 80-point move down for A. Now, if you get, say, a 30, 40-point bounce for B, all right, and then you have C equals A, that's another 80 points down, and it only takes us to the mid 4300s, and that's just not low enough for this wave 4. So this setup to me does not scream larger wave 4. It actually screams we have a wave 5 up towards 4,500, and that's the more likely scenario. Now we do have a theme in this market of shallow pullbacks. However, since wave 2 was a shallow pullback, using the theory of alternation, which means if wave 2 is shallow, wave 4 should be deep, all right, I would expect this to be a deeper pullback. So this just screams I'm too small to be larger wave 4, which tells me that it's more likely the wave 5 up towards 4,500 SPX. Now the way we will tell is how this rally reacts. It is overlapping, but this entire move up has been overlapping, so that just might as well throw that out the window at this point. This entire last 3 weeks has just been so choppy and so terrible. So it's completely overlapping, but that's to be expected in this market right now. And as we move up toward this new box I put on here, which is the B wave, this is the resistance for a B wave bounce. So if this is A, B, C, A of A, and we're coming up in B of A, we should hold this level and then shoot down in C. So if that happens and we break this low right here, then we are looking lower in a bigger corrective movement. However, if it moves through this B wave box, then it is very likely we are headed up towards 4,500 in wave 5 to finally top out this wave 3 of 3. Now we'll get into our trade setups in just one second, guys, but first I get asked all the time about individual stocks, and Elliott Wave is so in-depth that I just don't have time to go through every stock and try to find the winners. So for my long-term portfolio, I use Motley Fool Stock Advisor. It has been an incredible tool for me. My long-term portfolio is doing really well. They like to tout their older stuff, their Amazons and Walt Disney's and Netflix. You know, that stuff was good in 2001. But I want to tell you about their newer stuff, their picks that they gave me just a few years ago that have absolutely crushed it. So the first one is Shopify. They gave me this one in 2016 back here, around October of 2016, and it was trading at about $40 at that time. And they called it a market disruptor because they built the back end for Amazon's shopping cart. And this is what they look for. They look for market disruption, guys that are coming in and change the game, and that's what Shopify did. And now they're trading at $1,481, guys. I got them at $40 a share. They also gave me Twilio in 2017. Twilio was trading about $30 then. You know, they just started in July of 16. They got them right on them in 2017 saying they were a disruptor. They are now trading at 12 times that just 4 years later. These guys find market disruptors and they give them to you, and it is an incredible investment. So do they give you losers? Of course they do. The stock market is full of them. They gave me Under Armour at $30. We had to sell it at $10. But listen, I lost $20 a share on that. I made over $1,400 a share on Shopify. So the losers, because they get in so early and so low, the losers are generally pretty reasonable, where the winners run for a long time. So check out Motley Fool. It's $99 for the whole year. You get a money-back guarantee, 30-day money-back guarantee. If you get in there and you don't like the stocks, or you don't like the service, or you don't like the customer service, you can get your money back. All right, guys, so check that out. There's a link in the description. Click that link. You get it for $99 with that. Okay, guys, so let's get into our trade setups, okay? So the first thing we're looking for is the market to move up into this B wave box here. If it moves into this box and we get a strong rejection, we're looking to enter a short trade trying to capture that same 80-point move down of A here and C here. It's a really high reward, low risk trade because once we get the rejection and we enter the short, we're looking for that 80 points down of gain as our reward, whereas if it breaks back above the high here and over, then we would exit the trade there. So very, very high reward, low risk trade. If, however, it blows through this B wave box and up, all right, we are looking for it to head towards 4,500, and then we will look for topping action at that point. It could extend as high as 4,550, but we will look for topping action to enter a short around there and try to capture a big portion of that wave 4 down. There's no real upside to get long right now because I see it as about 50 points of upside, where there's also about 80 points of downside risk here. So not a whole lot of advantage to get long this high up and this close to what we consider a top. So we're really looking for chances to short this bull market, which you don't get very often. So let's see if we can find them and make that work. Guys, if you like the information that I'm putting out in this video and you want real-time market updates to know when we enter these trades exactly and what we're trading, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link. It'll take you over to Facebook. When you get over to my group and get accepted into my group, okay, come to the announcements tab right here. You scroll down, you'll see our documented trades, so you can see how we've been doing in our trades, and as well as you will see a link to our Slack channel. This is a free chat channel where I give out real-time market updates, our buy alerts, our sell alerts, exactly what we're trading, when we enter them, and when we exit them. It's a talented group of traders. We'd love to have you over there. There's just one thing you have to do to get accepted into my Facebook group and my Slack channel. You need to subscribe to my YouTube channel. So go ahead and hit that subscribe button down below. Come over to my Facebook group and get on Slack. We would love to have you over there, and let's make some money together. All right, guys, so key takeaways for today. We are watching the market to move up into this B wave box and see how it reacts. If we get a strong reversal here or a strong rejection, we will look to enter a short trade there, trying to capture that move down of C of A. If it blows through this box, we will let it run until it tops and then look to enter short there. That is the market update for today. I will talk to you tomorrow.